It's now time to bring you a second feature on the show today. We're focusing on the Nigerian Exchange Group. Now, the Nigerian Stock Exchange on the 10th of March this year announced that it had received final approvals for its demutualization plan from the Securities and Exchange Commission and also the Corporate Affairs Commission, respectively. With this, the nation's bourse joined the list of exchanges that have transited into a limited liability company owned by shareholders who provide capital and shares in profits or losses. Now, following the completion of the demutualization process, the Nigerian Stock Exchange has transitioned into the Nigerian Exchange Group and also unveiled its new brand identity. Now, the Ngx Brand Identity follows a monolithic brand architecture, which would also facilitate the formation of new subsidiaries by leveraging existing brand equity. The identity is also inspired by the arrows of the stock exchange ticker tape as well as monetary exchange between a buyer and seller. These arrows are stylized to form an N and also denote the act of collaboration. With this new development in place, the question now is how will this affect the cooperation and participation of the stock market? Well, to provide solutions to this discussion and much more, I have joining me now live in our Lagos studio, stockbroker and financial analyst Rotimi Fakejo. Good to have you on the show this afternoon.
A pleasure.
It's quite good news to see this new brand identity and the new architecture we're seeing coming into bear now. We're having the operating exchange, we're having the limited independent regulatory arm of the exchange, and then we also have the real estate. This is much more robust. What do you think this now portends for investors, and how does this redefine the investment volumes we'll be seeing playing out in the exchange group?
For the transformation that we have seen, it's been in the works for more than 4-5 years, but eventually we are there now. And it's a good thing that this development has come to stay. And with the kind of things that we are seeing, I believe definitely is going to portend a better future for the Nigerian capital market and also the exchange itself. Talking about the demutualization, we used to have an exchange before that were owned by members, and it was not for-profit organization as at that time. But for the transformation that we have seen, is now a for-profit organization, and also the members have transmuted to being shareholders, which implies that the exchange now runs towards profitability and also sustainability. And a lot of things are definitely going to come into place with this kind of position that we have right now. For the exchange, for the demutualization of the exchange, we have a situation whereby it's divided into 3 separate entities being overseen by a group CEO. And I think that separation of
it's critical.
Is really critical to what we are seeing. And I think when we have things like this, it's definitely going to transform to a higher efficiency and more creativity for the exchange.
And talking about the performance of the exchange we've seen so far now under the leadership of Oscar Oyema, were you expecting this?
Well, I think for advanced economies, and particularly maybe for another one in the African continent, that is Johannesburg Stock Exchange, we've seen a situation whereby they have been demutualized for quite a while. And Nigerian joining that foray, I think it's quite expected, being the largest market, the largest economy in Africa, although it's not the largest stock exchange. So I believe with Oscar Oyema having championed this cause, it's kudos to him, and I think it's a job well done. And I believe strongly that the transformation that we are seeing is definitely going to make the exchange a more transparent and more fair market, which is all what a real exchange ought to be. We've seen that in the past, but we are going to see it in a much better light, which definitely will be much better for the investing communities and also providing the service that is capital raising for organizations, for corporates, in order for them to be able to facilitate fund provision for their day-to-day activity.
For the average Nigerian now, they want to know why now the need to maintain the highest level of competitiveness both in the African and global market. Why now?
Well, now, I think this ought to have happened years back, but it's happened now. And I think the now is just the best time for us. The competitiveness is still there. And even in the Nigerian market, we have presently 3 exchanges. We have the FMDQ, we have the NASD, and we have the Nigerian Stock Exchange. Though those other ones are still upcoming. And when you look at the market capitalization of what they have listed on them, is still nothing compared to just a single entity on the Nigerian Stock Exchange. So those ones, you cannot say there is competition there for now. But on the Africa foray, there's really not much competition between African stock exchanges for now, because we don't have much of dual cross-border listing for securities among the exchanges, and there's really nothing for them to actually compete about, except for the fact that they are being measured by their level of capitalization vis-a-vis the strength of the listed entities on them. So, but for Johannesburg Stock Exchange, the competitive is more robust and more structure-based than any other exchange on the African
So we're
continent.
just trying to replicate that model.
That model.
And then replicating that model now, let's talk about the Nigerian exchange group also rebranding its social media assets. Now going into Instagram, YouTube, Twitter, and a whole lot more. This also goes into the investment objectives that the exchanges have in talking about inclusion and still the agenda of a bigger market. How do you think this also translates to achieving this objective?
Well, I think on the electronic, on e-trading platforms, I think we are still very much behind. And whether we like it or not, now is the time to actually put the exchange on the electronic media scene, and at the same time on that platform whereby virtually every investor will be able to trade as if they are on the floor
in real time.
Real time. There's still a lot of restrictions. The KYC requirement still doesn't permit quite a number of things. And I always say that with the evolution of BVN, and even now national identity being provided by NIMSE, I think the KYC structure can be relaxed a little, because the kind of situation whereby before you may not be able to see or know somebody to the house. Even though now you can't know the person to the house, a lot of other structures have been entrenched whereby it makes it available. So what I'm trying to say in essence is that we need to break that jinx and expand the network of investors being able to do transactions all by themselves. It's been happening, but it's not on the scale that would have been preferred. For instance, the youths are the ones that owns the future. Tech savvy. You understand? And if they are not brought into the market, a lot of them, I don't think we have many of such youths in the market. A lot of them trade Bitcoin, whether the government likes it or not. And the ease with which Bitcoin is being traded, I think that blockchain approach can be harnessed in order for us, for investors and the youths, to be able to participate in the market. And I think they really have to think about that, how to actually bring that platform to that level.
I was just going to ask right there, if you think we're going to see the cryptocurrency market come to stay in Nigeria, what sort of regulations do we now expect to also monitor, sanitize that market? Because at the end of the day, when we're looking at the evolution of the investment climate in Nigeria, we cannot but look towards that direction. A ban does not serve any purpose, wouldn't you say?
I think we're just playing to the gallery. Nigeria is just playing to the gallery by saying they ban the crypto currency activities in Nigeria. You can't do it. Every country is embracing it. For instance, Elon Musk was saying that you can buy Bitcoin. I mean, you can buy
your cars and other
their cars with a Bitcoin. So if it's been accepted in a more liberalized and in a more liberalized economy, then why are we saying?
But that's why I raised the question of regulation. Now, it is important we have regulation just to sanitize operations. That's just the biggest fear we have on ground right now, the fact that certain transactions cannot be monitored.
Well, it's going to be very, very difficult because they're regulating it. To say you ban a platform or a commodity or a service is announcing to the whole world that there is something there that we don't want you to know, and we are taking you off. So why don't you embrace it, regulate it, and you'll be able to know what to do from time to time to actually be able to monitor the activities in that environment. So staying away from it and looking at it as if it doesn't exist is not the solution.
Mr. Fakajo, so many people are itching and asking themselves, when will the floor of the exchange open once again to trading?
Well, I think that
yes, we can trade remotely, but the physical trading, there's just this missing element. You know, I can't just come to understand it. Or
it's nothing that people should really
Don't you miss it?
I do. Because the association, the discussions, and the fraternization on the floor of the exchange.
The closing gong and the fanfare that comes with it.
And all those things are very much missing. But a market like NASDAQ in the US is a floorless market, whereas the NYSE is floor-based. So if, for reason of the COVID-19 pandemic, we are finding ourselves in a situation like this, I think the only person that can actually give that answer, or the only time that that answer can be given, is when we see that the curve is already flattened and there is no more. Right now, we are seeing cases of 76 new cases in a day or 100, which is quite good, and at least we have really achieved so much in that respect. So I believe at the right time, the management of the stock exchange will deem it fit to, at least people are going to banks to do their transactions. So if that is already happening, then I see no reason why very soon we'll go back to the floor.
Our fingers remain crossed. But now, going back to the operations within the capital markets now, investors are still sitting on the fence in terms of the volume of local participation. You look at value of transaction, the volume, market capitalization data, and a whole lot more. Yes, the impact of the COVID-19 is real, but we are not still seeing that investment volume. One is the current macroeconomic situation we have in the country. You look at security and a whole lot more, and then you now question, okay, what sort of play would we also have from foreign investors as well, if we're not necessarily having local players still push aggressively, as we saw last year?
Well, I think the markets, the movement of prices in securities is demand push. And the demand is stimulated by performance of the listed equities. Now, we've been having good performance of listed equities. They've been doing a good dividend payout. And as such, I believe strongly that by now, the level of participation should have been upended. But it's not so. But what we really need to look at critically for now is that why are people not investing? The reason, number one, is that they have not come out of that phobia and apprehension of 2008. And they have every reason not to trust the market to the extent to which it ought to. Number two, the investing environment is very, very how will I put it now? It's very cumbersome for now.
But do you think with this announcement from the Nigerian Exchange Group, do you think this would also whet the appetite of more investors to come?
With
this announcement, yes, following the demutualization
well, I
process.
think there needs to be market penetration. The investors need to be penetrated. And one analysis I keep giving all the time is, take for instance, the average number of deals we have on the exchange on daily basis is about 5,000. 5,000 deals per day. And we have about 252 trading days for the year. Not taking out the not taking out the public holidays. So 250 trading days in a year times 5,000. That means 5,000 times 25, which times 250, which will give us about 1,250,000 deals in a year. Now, when you look at that, that means if one deal is done by an individual, and when you do a deal, you don't do any other transaction for the year, that means only about 1.25 million actually participated in the market for an entire year. Now, looking at the population of about 200 million, assuming of the 200 million, about for 1 to 15, the demographic age is about maybe for 1 to 18, maybe you have about 50 million. Then for those who can actually invest, maybe from 25 to 50 or 60, maybe you put their number at about, say, 70 million, for instance. Now, what that implies is that of 70 million people who can actually invest in the market, just about 1.25 million are actively playing. So what have we been doing over the years? So that penetration has to come in. And investor education needs to come. And people need to have confidence that if I buy now, the confidence that the exchange and the Securities and Exchange Commission were fighting before was about brokers playing with the account of investors. That has been eroded completely.
There's a bigger picture in terms of transparency.
So the transparency is almost 98%. So there's no way you can do such a thing that it cannot be traced within a record time. So there's no hiding place for such. Now, the investor education that needs to be done is about investors having confidence. If I buy a share of GT Bank today, for instance, at about 28 naira, will it not come down to as low as 18 naira or 15 naira in under 6 months due to situations that are not related to the company or to the investor himself? So that confidence is what is lacking right now. So what that implies is that there needs to be stability within the system. The kind of volatility we are seeing is very much unhealthy. So, and a lot of things will really have to come to play. We've seen some quite a level of stability within the system in the last 1 year, when the FPIs, that is the foreign portfolio investors, have stayed out of the market for a while, because they they increase the volatility in the market. But having stayed away because of lack of foreign exchange liquidity within the system, whereby they can't take their money out as a when due, that alone has helped the market, but it has also reduced the volume of transactions. So we hope that with investors' education, people now see that, okay, the stability we are seeing has come to stay. If I buy securities, one day the value will not get eroded. If I buy securities of a bank, one day CBN will not come and say they've taken over the bank, as we've seen in the case of Skybank, in the case of Spring Bank, and the likes. So such a thing, when people now see, then we need to remind them that, see what has happened in the last 1 year, and for now, let's look at it once again, come and try and see that the market is good.
So one of the biggest incentives to whet the appetite of investors is to have stronger education, enlightenment, to ensure that they also have all of the certainty they need to tick all the boxes and say, you know what, I'm going in big once and for all.
Yes.
Thank you very much for your time on the show today, Mr. Rotimi Fakayejo. It's been a pleasure speaking with you, and congratulations on the big news once again. I keep my fingers crossed. I want to have the announcement of the closing gong. It's one of the biggest activities we look out for at the close of trade in each and every single day.
Very soon it's going to happen.
Thank you very much once again.
A pleasure.